So now we need to talk about graphical blockers, chart blockers, right? We have done talking about risk per trade blockers. So now, what is a blocker? You know that the price is moving to the upside like this, okay? And now a blocker is something that you see on the chart that makes that when the price goes down like that, at this level, the price will have 0% probability chance to keep going down. 0% chance to keep going down, and then 100% to go up and make you have 100% chance to go up and make you have uh, um, profit and make you win. So a blocker is anything on the chart that we will identify that suppress, that delete a one direction and give 100% to the other direction. That's why I always say that trading is not 50-50 game. It is 100% game. It's not a 50%, 50% game. Those who say this is because they don't know how to trade, by the way. They are too biased. So let us look at the first blocker. The first blocker is called the red entry rejection. The first blocker is called the red entry rejection. And I will not necessarily read all of this because I prefer to explain to you what I wrote here. So when the price goes to the upside like this, then goes down, when it starts going down, you will see that the price will create a red candle this way that has a wick like this. This will be a red candle. This will be a red candle like this. And that has a wick. Okay. Then the price will start moving up back to the upside. And then keep moving down and create a new candle. This then new candle will be a candle like this. That would be a red candle, but the wick of this candle will need to touch the wick, at least the wick of the candle on the left. That is red. I mean the red one. This candle must be red. Must. When I say must, it cannot be green. So if you see a green wick here, a green wick like this, and the green wick has been touched, it doesn't count. So for the trade to keep going up at 100% to the upside, all right, the this red candle that is good doing the pullback must touch the red candle on the left here. That's the only time that's the only reason that will make the price to go up by 100% to the upside. If it touch only the green wick, it will not go to the upside, or it will not be sure at 100%. So that's what will block the price to go down to the downside by 0% here. And I call it red pullback or red rejection, red pullback. Okay. And secondly, this phenomenon mostly happen when Tenkan and Kijun just have their first ticket cross. and Tenkan has not yet been touched. So the price will keep moving to the upside like this and then fall down later on and touch Tenkan far later, far later there, far later here. Okay, that's what will happen. The price will move up. But before Tenkan is touched here, far ahead, this red will first of all be shown. And you will need to enter here. You will not, because sometimes people will miss a trade, a trade, a good long trade like this because they didn't see this red pullback. Okay, let us look at it on the chart. Um, for example, okay, let us take this example. You see at this point, right? No, not not this one. Why am I not seeing this example? I used to. Why is it this complex to see all this? Is it on daily that I saw it? Why is it that complex to see? Is it on daily? It must be on daily, I think. Okay, that's it, yeah. That is it, yeah. Yeah, it's on daily that I saw it. So look for example this example here. Tenkan just went above Kijun on this TK cross, right? And you will see that the price moved to the upside, then went down, created this red candle, then moved up to the upside. But before the price break this upside, it went back as a pullback to the downside, touched first of all at least the wick of this candle, this red candle, before moving up and break this top. And since this is the red pullback then, and since this movement has been done. Tenkan has not been touched. Tenkan has been touched only later on, far ahead, far later on. We can have another element here. Look at this one. Since sticky cross has crossed here, what has been created is that this price created this high and then created these two candles. And the highest of the highest wick of the candle is this one. And then the price moved up, created now what? Another red candle. This red candle came and touched this wick on the left before the price moved up, and then before even Tenkano has been touched even for the first time. So it's because the movement has a lot of power, a lot of impulsion to the upside. And I realized that it happened a lot at the fresh chicken cross like this. And Tenkan is not touched when it happens. Okay. And you can actually trade this movement without letting it go, without you. Without you. Because the goal of an elite, hyper elite trader is actually to know everything and anything. Not even one thing should say, for example, this one. Before Tenkan got touched here, you see, you see that you see this rising, this the price rising the upside here, creating this week, then go down, breaking above, but then this red candle, this new red candle touched at least the week here, come even till the body before the price move again to the upside. Did again the same thing the second time, then move above, did again the next thing to the next thing. Okay. Did again the next thing. Um Before Tenkan. So that's what is called the red pullback. Okay. So now let us talk about the next type of pullback. The next type of pullback are the setup type from the time frame H4 to the time frame like from H4 and above, like monthly, weekly, daily. So the type of setups. So you need to understand that when you have here, for example, Tenkan, and then you have here Kijun, and then you have here SSA, then you have here SS or SSB. The price move to the upside, touch the first time, then Tenkan the first time, then touch Tenkan the second time, then touch Tenkan the third time. But from the fourth time, the price will fall as a reversal and go down. So this type of setups that you must understand is you have setup for continuity to the upside. That's what I'm talking. The number of touches for the upside shows the strength for the upside for the up for the buy. So you can buy here the first three. But from the first for the fourth touch of Tenkan, it can rise to the upside, right? But it may not rise too 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 high. The fifth will be a sure downtrend, a sure reversal. So the first three are blockers. The first three block the probability for the price to go down and put the probability for the price to go down by 0% down. That's why they are blockers of the down. That's why you will be sure to make profit. Okay. After a ticket cross, the first Tinkan touch of the Tinkan line. Now arriving at the fourth and the fifth Tinkan touch, it now blocks the probability for the price to go up by 0% and give a 100% reversal probability. Okay. Mostly the fifth touch. That's why you can see basically, let us use, no, let's not use this. Okay, let us use this example first. It's not bad, it's not bad. Okay, from the rising right, you have the first touch, then the second touch here, then the third touch here, then the fourth touch here, you see, then the fifth touch here. You see that the first touch created a V breaker that broke this one. The second touch created another V breaker. The third touch started attempt a V breaker but failed. The third one failed. The fifth one failed dramatically too because none of them actually broke this one. So from this fifth touch, right, you should understand that the chance for the price to go up is 0% and start. You can even start selling here before you even see okay the inverted thinker. So let me take another example that will be a little bit more. For example, let us take another example here. This one from this ticket cross here, okay. You have the first touch of Tinkan here, the second touch of Tinkan here. That created a V breaker that broke the first two. Then the third one rise above, then create the fourth one. But from the fourth one, you will see it did not come and break this one. And then the price fall down. So the first three in general give 0% chance of the price to go down. But then the fourth and the fifth Y give 0% chance of the price to go up. So you can then sell with all confidence. That is what we call blockers. Blockers. Another example is this one. Another example is this one. For example, from ticket cross here, you have one touch, two touch, three touches, four touches. This fourth even place made the price go to the upside just because it is actually 1, 2. Okay. But the fifth touch was actually a reversal for sure. Okay. This fifth touch gives 0% chance of the price to go to the upside and only 100% chance for the price to go down. That's what I try to say, the number of touches. And now you have reversal blockers. Now you have reversal blocker. Okay. Reversal blocker. You can, for example, see here when the price went to the upside and the price started reversing, Tenkan start bending to the downside. The inverted Tenkan is the first reversal blocker. Then inverted Kijun is the second reversal blocker. Why is it the second reversal blocker? Is because this inverted Tenkan proves you there is 0% chance for the price to go up and 100% chance for the price to go down. That is what we call a blocker. And then same thing here, 0 and 100%. Okay. Inverted SSA is also a reversal blocker. Okay. Yeah. We have another reversal blocker that is called SSB inverted. For example, here, The price rise to the upside, create continuity blockers. Then now when reversal blockers start, you have inverted Tenkan 1, inverted Tenkan in the cloud 2, SSB inverted here because this is the SSB line. This SSB inverted give you 0% chance to go to the upside and 100% chance to go to the downside. So that is that is that's how you see blockers. So now another thing is the time frame skipping by 2. The another blocker is the time frame skipping by 2. The time frame skipping by 2 is something that we saw already and is something very useful for the entry. Let us say, for example, that you took an entry here. Here is a setup Tenkan Kijun in 4 hours, right? The time frame skipping by 2 is a blocker because when you arrive at at H4 setup, right? You have H1 as a time frame and 15 minutes. You skip H1, you go to 15 minutes to do to enter, and it gives you what the best end timing for your entry. So it blocks very well the timing. Time frame skipping is mostly for the timing of the entry. So when you go on 15 minutes here, the first time that you will see the Tenkan line inverted to the upside being touched. You buy it. You buy it. So it gives you a good timing. Why? Because look, for example, there is another blocker here. There is another blocker. There is another type of blocker here that are called TS3. TS3 is what? Is when you are in 4 hour. When you are in 4 hour, rather than skipping 2 time frame, you skip instead 3 time frame and you go on enter earlier on TS3. TS3, right? Time frame skipping by 3. Okay. It will give you an earlier, a very earlier entry, but TS2 will give you a more confirmed, solid, with less noise entry, confirmed entry. So we can actually go and verify it. You will see that TS2 will not have too much noise for the entry. You will see TS2, as soon as we created this ticket cost to the upside, you do not see too many ticket costs again, but below the cloud. But if you go on 5 minutes, you will see that the entry on 5 minutes, if you take your first and can invert it to the upside in 5 minutes, for example, this one here, this is the first thing can inverted here, right? You buy this for the first time. You will see that your entry will be tested many times. The entry line will be tested, and you will not know exactly where to place the stop loss. Maybe here, maybe here. You should not use the maybes in English in trading. But meanwhile, the entry in 15 minutes has not been tested. Even here, it has not been tested. has been smooth going up, right? So Tenkan going ticket cost going up like this. For so TS3 give a lot of ticket costs going up, but it is below the cloud, below SSA, and it doesn't make you feel too much confident. Normally, when Tenkan inverted is created like this, one time, you want only one ticket cost to the upside. That's why TS3 is a too early entry, even though it's an entry that is interesting because it's early, but it will give you a lot of zigzagging TK, 1, 2, 3 TK. I think you know that. And then you have another. So that's what I try to say here, that the TS2 is more confirmed, and the the TS3 is uh, too early, right? And it creates a lot of ticket cross, 1 or 2 or 3 ticket cross, 2 or 3 ticket cross below the cloud. So let us look at another blocker that will be Vegeta Ishimoku cycle. Let's look at, for example, this SSB. So, for the Vegeta Ishimoku cycle, you need to use the technique of CS2. Like you go on 4 hour. We was on 4 hour. Sure, you look at it. Mosquitoes. We look at the setup, and then you have H1, this 15 minutes. You have the entry here. So first of all, you do the TS2 for the Vegeta Ishimoku cycle, and inside the entry time frame, which is 15 minutes, you use the Viche Shimoku cycle, okay? So now that's what we got here. And then you have here the origin, then the reversal, then the transition. Then you have at this level the new trend, then the correction, then the push trend. That's what you got, okay? After you got this, you got all of this. What happened is that, how do you know the blockers? You know the blockers because the cycle, each cycle gives you 0% chance and 100% chance. For example, at this level, you know that at the origin cycle, you know that you have 0% chance of the price to keep going down and 100% chance for the price to even continue above Kijun. So when you enter with confidence. Okay. You enter here with confidence. You can actually enter inside the first inverted thing, can place your stop loss because there is 0% chance for your stop loss to be touched down there. And then even here on the reversal cycle, You have 0% chance for the price to go down and 100% chance for the price to go up. Why? Because it is inside the A plus setup of 4 hour. You are in 15 minutes now, but the setup, the zone, the setup that give impulsion has been taken from 4 hour. So it can only go up. So you can then buy Kijun in inverted Kijun in 15 minutes and have 100% chance to go up there. The transition is same thing. The you will only have 0% on the bottom and 100% to the top, right? 0% chance here and 100% for the new trend. Okay, you buy like this. And then for the correction, you have instead 0% above because the price need to correct 100% to touch the cloud. And then for the push trend, as soon as you touch the cloud, now you have 0% chance to keep going down further and 100% chance to go up in terms of chances, right? So that's how it works. That's how it works, basically. That's how it works. So that's how you know the blockers. Another type of blocker is the linear orientation touch and the volumic orientation dominance. Okay, what do I call it? Why do I call them that way? What is the linear and the volumic? You know, linear stand for one line. For example, the Tenkan line. That is linear. Okay. And now the other thing will be volumic. Volumic is equal to two lines. It will be equal to having Tenkan and Kijun crossing. Is the cross of two lines. That is what I call volumic. Okay. Now, sometimes the price move and the first touch of Tenkan here give you a very good entry. The first touch of Tenkan, it gives you the very good entry. For example, the first touch of Tenkan to the upside. You see, we are here in 15 minutes. When Tenkan started bending to the upside here, this first touch of Tenkan gave you a good entry for a buy where you could have just placed the stop loss here and then buy for a long run. Okay. And then buy for a long run. Voila. That's what I'm talking about. Then now, you also have the fact that when Tenkan and Kijun crosses, the first touch of Tenkan also after the TK cross is also a good buy, a very good buy. Like every first touch is like a vision girl. But anyway, what uh, even though vision doesn't mean anything. Like every first time is also a good time because it's novel, it's new, it's actually appealing. Now you have also the ticket cost like this, right? The first touch of the volume give you a good time to buy, like this one. Now, I want to emphasize on another thing that is the comparison between the two. There is one that will give that has more weight in some case than the other. Let me compare them. Look at this whole rising trend. You have at this level an inverted Tenkan to the upside, right? Then you have the TK cross that is going to the upside. TK has started to cross from this point and has never been crossed back up until above here, right? But you see a lot of Tenkan inverted to the downside many times, like 4 times. Are you selling? Are you buying? You need to understand that these are just normal Tenkan inverted to the downside reduction because you know Tenkan is a fast moving line that used to go down. So when you see Tenkan going down, but the volume staying, but Tenkan staying above Kijun, the volume, right? When Tenkan stay above Kijun like this, is still up, but Tenkan go down, but the line Tenkan go down. You need to prioritize the volume above the line. Okay, and that's the comparison that I want to say. That's why I say the volume is dominant above the line. That's a little bit what is happening on the gold right now on weekly. That's a little bit that happened on the gold right now on weekly. You see, Tenkan has bended to the upside here, right? But this ticket cost, like the cost of Tenkan and Kijun is to the downside. That's why you see daily on daily, Ten, since Tenkan has been bended to the upside, the candle are keep moving to the downside. Even here is a sell. It is keep moving to the downside because the volume has more weight than the line, a single line. That's what I'm trying to talk about. So now let us talk about another element. Let's talk about another element, the corrections. The corrections. The correction in vegetation cycle. Let us take this case. From this point, what I want to tell you is that sometimes the price move to the upside and create correction to the downside like this. One, two, and three. After three correction, right? The fourth correction will not be a correction. It will be a total reversal of the price to the downside. So the fourth correction will show you that there is 0% chances of the price to keep going up and 100% chances of the price to keep going down because it is the fourth correction. Look, for example, at this, at what happened on the chart here. You had the price going down here for 1, 2, 3. This first correction stop at Kijun. This second correction stop at SSB. This third correction is stopping at Kijun. But the fourth one created a KSB to the downside. That was a clear, the first three correction was like, I'm correcting, but there's 0% shares of me going down. Now I can go up. This one too, 0% chance of me going down. Now I can go up. 0% chance of me going down. Now I can go up. But the fourth one, the fourth correction, when you start reversing here, from here, 0% chance of going up. Now I can go down at 100% chances because it's the fourth correction. It's about number of corrections too that matter in terms of blockers. So that's what I wanted to say. Corrections of the recession cycle. It happened a lot on 4 hours. Now let us talk about the let's talk about the MT, the last two blockers. chart blockers. We have the empty Tenkan inverted, the empty Tenkan hit VRS. So let's go on weekly, for example. When the candles, okay, on weekly, on USD GPY, you understand why some price reverse out of nowhere. You see here, you see at this level. First of all, let us identify the resistance and the support on the left. This level, right? I will place an horizontal line like this. When Tenkan will enter above this horizontal line, most of the time I'll take a rectangle like this and I place. When Tenkan will be inside that rectangle, Tenkan hit VRS. The candles that were above Tenkan, like all of these candles will fall down. So when Tenkan enters inside this rectangle like this one, the candle will just get above, right, at the top. It will give 0% chance for the candle to keep going up and 100% chance for the candles to go down. That's what I call blockers. If you go on daily, you saw it. That's why you see this fall down, this massive fall. Okay. Now, Tenkan cover is another one that is a reversal. Tenkan cover is a reversal too. Let us look at it. Okay, Tenkan cover means that, right? If the price has moved up, Tenkan will create something like this. And the candle that were going up will start staying inside below Tenkan here, like this inside here. And Tenkan will cover like a roof. It will cover like a roof or a hand of a big brother telling to the candle to go down. That's what happened here, right? It is mostly after the number like this one. Tenkan is above and the candle is just there inside. And we go down, brother. And we go down. Okay. Okay, we also have this one. The Tenkan is above like this, and then the candle, you see, it gives 0% chance of the candle to go up, and then 100% chance for the candle to go down. That's what blockers are. That's what blockers are. That's what blockers are. So let's now look at schemes. Scheme. Let's now look at schemes now.